Welcome to Crypto Strategist HQ, where smart investors come to stay ahead of the curve. In 2025, real-world assets tokenization real-world assets on the blockchain is emerging as the 10x opportunity you can't afford to ignore. From real estate to treasury bonds, tokenized assets could reshape your portfolio. Don't forget to like and subscribe for more game-changing crypto strategies. 1. What is real-world assets tokenization? Real-world asset tokenization is the process of digitizing physical or legal assets on blockchain. It allows investors to own fractional shares of real estate, bonds, art, or company equity. These tokenized assets exist on a blockchain, giving access to global, permissionless markets. It brings liquidity to illiquid markets by letting assets trade like crypto on digital platforms. Ownership becomes provable, traceable, and transferable through cryptographic smart contracts. Tokenization is secured by on-chain technology and off-chain asset verification mechanisms. Compliance can be coded directly into the tokens to meet jurisdictional legal requirements. 2. Why institutions are moving and financial giants are turning to tokenized assets for speed, transparency, and cost efficiency. Settlement times for bonds and equities drop from days to seconds with programmable contracts. Transparency improves since each transaction is recorded immutably on a public blockchain ledger. Compliance and audits become easier when asset data is real-time and accessible globally. Asset managers can diversify portfolios using tokenized products without middlemen or custodians. This reduces operational risk and cost while expanding investor access through digital platforms. Governments are exploring tokenized infrastructure for treasury bonds and public services. 3. Tokenizing real estate. Real estate is one of the most valuable and illiquid assets ready to benefit from tokenization. Through tokenized ownership, people can buy small shares of buildings or commercial properties. This fractional model opens global access to investment opportunities previously locked by wealth. Landlords can tokenize rental properties, distributing profits as yield to token holders monthly. Property sales become faster and cheaper, with automated legal agreements built into tokens. Title deeds can be represented as digital certificates backed by legal contracts and escrow. Decentralized real estate platforms provide dashboards to manage tokenized property portfolios. 4. Gold and precious metal tokens. Tokenized gold represents a fixed amount of physical gold stored securely in audited vaults. Investors gain exposure to gold stability while benefiting from blockchain's speed and access. These tokens track real-time market prices and are redeemable for the actual physical asset. Trusted issuers regularly publish reserve audits to confirm one-to-one backing of every token. Unlike traditional gold markets, token holders can trade assets globally in seconds, anytime. Platforms like Paxos and Tether Gold have built early trust in tokenized precious metals. Staking mechanisms may even allow gold token holders to earn yield in decentralized finance. 5. Bonds and fixed income on-chain. Tokenizing treasury bonds allows governments to offer debt instruments on decentralized platforms. This increases transparency, widens access, and shortens settlement times from days to minutes. Retail investors can now access government bonds in small amounts directly from their wallet. Programmable smart contracts automate coupon payments and maturity redemptions reliably. Bondholders benefit from liquidity by selling tokens peer-to-peer instead of waiting to maturity. Platforms like Ondo Finance tokenize bonds and offer them with yield in a compliant framework. Fixed income becomes composable, interoperable, and available 24/7 worldwide. 6. Art and collectibles tokenization. High-value art pieces and collectibles are entering blockchain as tokenized fractional assets. Through tokenization, a masterpiece worth millions can be split into thousands of micro-shares. Ownership becomes accessible to investors who want exposure but cannot afford full artwork. Verification is enhanced with digital certificates and blockchain-based provenance tracking. Token holders may gain rights like exhibition revenue, resale profit, or exclusive display access. Platforms like Masterworks tokenize curated fine art portfolios for both retail and private clients. Cultural assets like music royalties and rare vintage collectibles are also entering this space. 7. Legal and compliance considerations. Real-world assets tokenization must meet strict regulatory standards to remain compliant and enforceable. Each token type may need approval from financial authorities depending on its underlying asset. Know your customer and anti-money laundering policies are integrated in regulated platforms. Smart contracts must include permissioned controls when working with security-grade tokens. Jurisdictional licensing and custodial responsibility require strong legal infrastructure. Token issuers partner with licensed custodians to hold physical assets and ensure legal recourse. Security tokens may need disclosures similar to publicly traded stocks or regulated funds. 8. Yield and passive income opportunities. Tokenized assets can generate predictable income through automated payment mechanisms. Real estate rental profits, bond coupons, or gold lease rates are all programmable via tokens. Investors earn passive income without middlemen, delays, or complex administrative layers. Some platforms offer staking or lending based on tokenized asset collateral for extra returns. This creates powerful cash flow opportunities directly accessible through smart wallets. Institutional-grade risk profiles combined with passive yield attract conservative investors. Passive crypto income backed by real assets bridges speculative and stable investment worlds. 9. How to build a tokenized portfolio. Start by researching platforms with verified real-world asset token offerings and custody audits. Choose categories like real estate, gold, bonds, or art based on your risk profile and goals. Verify issuers, check legal compliance, and assess whether tokens are redeemable for assets. Build diversification across token classes to balance risk between yield, value, and liquidity. Use non-custodial wallets or trusted exchanges to manage, track, and rebalance your holdings. Evaluate passive income options through staking or reward-based real-world asset mechanisms. Reinvest earnings or take profits gradually as tokens appreciate with asset market performance. 10. Why real-world assets tokens could 10x real-world assets connect trillions in traditional value to the speed of blockchain innovation. Tokenizing these assets reduces friction, widens access, and invites new waves of investors. Markets like real estate and bonds are massive and ripe for disruption through token technology. Institutions want programmable finance, and tokenization offers the ultimate tool for automation. Global accessibility, 24/7 liquidity, and passive yield boost token adoption curves. As compliance improves, regulated platforms will onboard mainstream capital with confidence. Tokens backed by tangible value reduce speculation and encourage sustainable investment behavior. Retail investors gain access to assets once reserved for large banks or accredited institutions. Tokenizing real-world assets isn't just a trend, it's unlocking new value, new access, and serious upside for early movers. Which real-world asset sector are you watching most closely? Drop your thoughts below. And if you're ready to build a smarter, more future-proof portfolio, don't forget to like and subscribe to Crypto Strategist HQ for expert crypto breakdowns and high-potential plays.